Bitcoin price broke above $22,500 in January, gaining 40.5% in the month and accompanied by improvements in the stock market. E-commerce and entertainment companies were the year-to-date market performers. Strong corporate earnings from Chevron and expectations for Apple's upcoming earnings validate stock valuations. American institutional investors represent 85% of recent purchasing activity. Bitcoin derivatives metrics show professional traders are positioned favorably. While the market is favorable for bulls, the Federal Reserve's interest rate hiking campaign may cause a recessionary environment. This could limit stock market performance. This article provides an in-depth analysis of Bitcoins and the stock market's performance in January. It also examines the derivative metrics to get a better understanding of how professional traders are positioned in the current market conditions. The article provides detailed information regarding the economic indicators, corporate earnings, and other factors that are affecting the performance of Bitcoin and stocks. It also explains how the Federal Reserve's interest rate policies could affect the market in the future. Overall, the article provides insightful analysis of the current market conditions and how they could affect Bitcoin and stocks. Bitcoin experienced its biggest single-day percentage loss since early November on Monday, dropping below $22,600. This resulted in $44 million worth of BTC long positions being liquidated. Ether also dropped 5%. Crypto-exposed stocks such as Coinbase and Marathon Digital Holdings sank, reflecting investor fear and concern about the crypto market. The Federal Open Market Committee meeting this week is expected to raise interest rates. This may contribute to a continuation of the downward momentum. Bitcoin's resistance below $24,000 and risk aversion are contributing to the market's current state. Support may not be found until the $21,000 region. This article provides an overview of the recent decline of the crypto market, particularly Bitcoin, and its correlation with Wall Street's defensive behavior before this week's major risk events. The market analyst from Oanda further explains the need for inflation risks to go away in order for Bitcoin's underlying support to remain. Sorare has sealed a deal with the English Premier League to mint Ethereum-based digital player cards on its platform. The 4-year contract will see Sorare mint cards of Premier League players and royalties split between Sorare and the Premier League. Fans can collect and trade the cards on compatible marketplaces like OpenSea. They are available to play on Sorare's free-to-play fantasy sports league. This deal between the English Premier League and blockchain-powered fantasy sports firm Sorare is a great example of how blockchain technology is being used to connect fans, players and organizations. The use of blockchain technology and the ERC-721 token standard for their NFT player cards allows users to collect and trade the cards, as well as play on the platform's free-to-play fantasy sports league. It is an exciting development for the world of sports and blockchain technology, and one that will no doubt bring fans closer to their favorite clubs. The ongoing LBRY SEC lawsuit is of significant importance to the cryptocurrency market. The judge's ruling could set a precedent for similar cases, such as the Ripple lawsuit. The January 30th hearing focused on the question of whether or not the LBC token itself is a security, and the SEC admitted on record that it is not. This implies that many holders of the token utilized it for purposes of consuming, rather than investing. The SEC is seeking a permanent injunction that does not distinguish between LBRY, its executives, and users of the platform. Clarity on secondary market transactions could be beneficial to the Ripple lawsuit and the cryptocurrency market as a whole. This is an important case to follow for anyone interested in the cryptocurrency market, as it could set a precedent for how other projects are treated in the future. A ruling in favor of secondary market transactions could be beneficial not just for the Ripple lawsuit, but for the overall crypto market. The launch of Ordinals, a protocol that stores NFTs on the Bitcoin blockchain, has sparked a debate. Bitcoin purists who are against non-financial uses of the network are on one side, while those who embrace it are on the other. SegWit and Taproot upgrades have enabled the protocol to be possible and have reignited the debate Satoshi Nakamoto started in 2010. Some Bitcoiners see the protocol as an attack while others view it as a potential solution to the decreasing Bitcoin block subsidy. The debate continues to rage in the community. Some view it as a way to keep Bitcoin safe, while others see it as a way to have fun in a decentralized, permissionless way. This article provides an interesting look into the debate between Bitcoin purists and those embracing the Ordinals protocol. The Ordinals protocol is a new way to store NFTs on the Bitcoin blockchain, and it has opened up a debate among the Bitcoin community. On one side are those who believe Bitcoin should be restricted to financial transactions, while on the other side are those who see the network as large and versatile enough to host a range of use cases. The article looks into the history of the Bitcoin network and the various opinions on the Ordinals protocol, offering a comprehensive overview of the issue. The article also touches on the potential benefits of the protocol, such as the ability to sustain the Bitcoin network with higher transaction fees. It is an interesting look at a debate that could shape the future of the network. Cryptocurrencies have seen a surge in the first month of 2023, adding $250 billion to the combined crypto market. It has surpassed Goldman Sachs' expectations. Bitcoin, Ethereum, and other top 10 coins have seen significant gains, with some smaller coins performing even better. There is some market trepidation in anticipation of the Federal Reserve's upcoming interest rate decision. It is expected to raise rates to a new target range of 4.5% to 4.75%. The Fed's policy of rapid interest rate hikes was designed to reduce inflation, but the market is now expecting rate cuts. This could lead to a short-term correction in crypto and other risk assets. This news is quite bullish for the crypto market, and the Federal Reserve's upcoming interest rate decision is likely to have a large impact on the prices of cryptocurrencies. The market is expecting the Fed to raise its funds rate, and if this happens, it could lead to a short-term correction in crypto prices. However, the overall outlook for the crypto market is still positive, and the Fed's decision could be an opportunity for investors to capitalize on the market's current momentum. Bitcoin saw a shift in bullish gains to choppy price action on January 31st. The BTC-USD pair briefly wicked to just above $22,500 on Bitstamp overnight, before rebounding to short-term resistance below $23,000. With the monthly close just hours away, liquidations mounted. Despite Bitcoin maintaining a narrow trading range, the Federal Reserve's interest rate decision on February 1st was imminent. On January 30th, $46 million of long liquidations occurred, which was the highest daily total of 2023 so far. Bid and ask liquidity at $22,000 and $24,000 respectively kept BTC-USD in check. However, this could change due to the US equities losing ground and a decrease in risk appetite. This was evident in a negative correlation between stablecoin deposits and BTC-USD growth in the second half of January. This article provides an in-depth overview of the factors that have been influencing Bitcoin's price action in the last few days of January. It looks at the data from Cointelegraph Markets Pro and TradingView, as well as on-chain analytics from Material Indicators and CryptoQuant. It also highlights the impact of the US Federal Reserve's interest rate decision, which could have a strong influence on the market this week. Overall, the article provides a comprehensive picture of the market and its current dynamics. The Ethereum Foundation is preparing to launch the Zhejiang public withdrawal testnet on February 1st at 3 p.m. UTC. 6 days later, the Shanghai and Capella testnets will be triggered at epoch 1350. This will allow users to withdraw their staked Ether assets and rewards since the success of the Ethereum merge upgrade in September 2020. The Zhejiang testnet will feature all Ethereum improvement protocols included in the Shanghai upgrade. The developers are targeting a tentative date of March 2023 for the Shanghai hard fork. The next upgrade on the roadmap is EIP 4844, which is expected to be released in May or June of this year. It could potentially increase the scalability of Layer 2 rollups on Ethereum. This post by Ethereum Foundation developer Parithosh Jayanti provides an update on the upcoming testnets for the Shanghai hard fork. After the successful launch of the merge upgrade in September 2020, users have been able to stake their ETH on the proof-of-stake network. Zhejiang will be the first public testnet to launch after the merge upgrade, and Shanghai is still targeted for a tentative date of March 2023. In addition, the upcoming Zhejiang testnet will also feature all Ethereum improvement protocols included in the Shanghai upgrade. The next upgrade on the developer's roadmap is EIP 4844, which could potentially increase scalability on Ethereum and lower transaction fees.